the heart of where innovation, money, and power collide in Silicon Valley and beyond. This is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
Live from New York and San Francisco, this is Bloomberg Technology. Coming up, Ubisoft jumps on buyout reports as Tencent and its founders are taking Assassin's Creed maker private.
And the EU votes to impose tariffs up to 45% on Chinese electric vehicles. We discussed the trade tensions.
And Meta unveils an AI video generator as its AI push makes Zuckerberg the world's second richest position. But first, we go to our top stock story, Ed.
Yes, French video game maker Ubisoft, actually in the 30 minutes left in European trading in Paris, the stock on track for its biggest jump on record, one-day jump. Bloomberg reporting in the last 90 minutes, according to sources, that Tencent, the Chinese technology company, and the Guillemot family, the founding family behind Ubisoft, the French video game maker, are considering a buyout of the company. There are a number of factors behind that. Let's get right out to our Paris bureau and Bloomberg's Benoit Berthelot, who broke this story with colleagues. It's been under pressure, right? This is about stabilizing Ubisoft. What do we know from sources? What's on the table here?
Yeah, exactly. So it's a reflection that the biggest investors in Ubisoft right now, the Guillemot family, the founding family, and also shareholder Tencent are having at the moment, because that follows a rough time for the company. They had issued a profit warning recently. They've been disappointed by the release of an important game, a Star Wars game, and they delayed another important game, Assassin's Creed Shadows, to next year. That has sent the shares plunging. The company has lost half of its market value this year. So there are also activist investors at the moment asking for either a take private or a sale of the company. So this is all happening in this context. One of the options they consider, as we report, according to our sources, is a joint take private of the company. Mm-hmm. There are also other options being considered and that are on the table.
Ultimately, Tencent's an interesting name. We know they're already an investor alongside the Guillemot family, but would Chinese buyers be able to get their hands on a prized French treasure?
They would do it. So they are in a concert. They are in a close collaboration with the Guillemot family. They made a deal 2 years ago, and they invested actually in the family holding. There are 5 Guillemot brothers and also the extended family, and Tencent already bought less than half of their family holding. So they are sort of intertwined. And Tencent has been investing in European video games company. Obviously, Ubisoft is interesting for them because of the IPs they have. Assassin's Creed, a hugely popular game. Ubisoft has been developing a mobile version of the game, especially for Tencent, the Chinese market. There is also Rayman, the Rabbids, and it's one of the rare big independent studios, let's say, in the world. So yeah, they sort of are close to the Guillemot and evaluating the situation. That was an important investment for them, and they are figuring out the situation.
So Yves Guillemot is the CEO of Ubisoft, and you're absolutely right, like the new Assassin's Creed Shadows coming, Rayman, so many people watching Bloomberg Technology, would have grown up playing Rayman. I don't understand that, though. He's the CEO. The family is part of the buyout, according to sources. Just explain the basics of how the company is structured and the governance.
Yeah, so they founded, the Guillemot brothers, they founded Ubisoft almost 40 years ago, and they are still very much in control of the company. They have the 5 brothers are at the board of the company, but Yves Guillemot is now 64. And they made that deal with Tencent to sort of protect the company from buyouts in 2022. At least it was seen as such by analysts, and it's sort of limiting what Tencent can do. There are different timelines, but Tencent cannot have a bigger than 10% stake, for example. The Guillemot family still has a majority of the voting rights. Right. Tencent has no veto voting rights. So it was really a deal that was seen as killing speculation around the company. But obviously times have a little changed recently, and they wonder if it would be a good moment to make that move.
Benoit, we thank you. Benoit Berthelot there. Now, let's have a quick check on these markets, because Ubisoft moving a lot, but actually the market's steadily higher at the moment after what was a blowout jobs report. We've just seen that US hiring topped all estimates. So what does that mean for rate bets when you've got non-farm payrolls coming in at 254,000 in September, and indeed some inflationary pressure, people dialing back the rate cut bets on the Federal Reserve. NASDAQ, though, managing to be up 0.8%. The bond market is where the big moves are. Let's go to CBIZ Chief Investment Officer Anna Rathbun. So much to discuss, whether it's M&A, take privates, and whether it's just ultimately the fundamentals. We start there. This job market on fire. Do we still support big tech investments?
Good morning. Labor market is on fire, but we have to remember it is 1 month release. So we can take it at face value because it's great and let's celebrate it, but we can't extrapolate it way too far because in totality, there are definitely weaknesses. I believe Reuters came out with some report about, and the Challengers report about losing tech jobs, right? Does that mean I don't support tech investments? No, because I do think that part of the tech jobs loss is correction on overhiring for AI. And this is happening all over the world, especially with Samsung coming out with some layoff announcements. Tech investments, I would still support because I know a lot of people think it's a bubble, but it's supposed to be a bubble when you have something this innovative. This is sort of par for the course. So I think it's still worth it to go along for the ride. But in the short term, I do understand the concern. But long term, it's still an investment.
Let's just dwell on that for a moment in terms of the overall data. I think it was, what was it, Ed? The Challenger data showing that half of all the tech layoffs, and tech layoffs have been behind most of the layoffs this year, half of them are because of artificial intelligence, Ed.
Yeah, and then there's a difference, or you've got to distinguish between layoffs that are announced and layoffs that are enacted. I also just want to spend a second on the moment, how wild jobs data is on social media in particular. And I don't know what your life is like before coming on Bloomberg Technology, but you'd think that this was a once-in-a-lifetime moment if you go on X. Bloomberg's Joe Weisenthal going, this is what we wake up for and why we all go onto social media.
I mean, he does do that every single jobs read.
Exactly. Is that, if you're a technology investor, is that what it's really like when you get economic data like this?
Well, maybe, maybe not. It's not like that for me. So we're long-term investors, so it is exciting. I do participate in some of the excitement in the short term. But again, if I'm looking at AI, I'm looking at the long-term potential. This one job number is just not going to really do anything for me, right? So yes and no, I do participate, but it doesn't affect what I do.
If it doesn't affect ultimately what you're up to, let's think about what it affects in terms of market sentiment for big tech and indeed the opportunity to see consolidation. We've seen themes of M&A, whether it's out of dire need and distress, like we saw ultimately in the pay TV deals earlier this week. We now hear of reports that companies that have been really beaten up from a market cap perspective are now being eyed to take private. Is that going to be something we see even as rates come down?
Well, the rates have to come down considerably. And, talking about the job market today, there's a lot of fear. I think the market's repricing itself from 50 basis point total for the rest of the year to 75. I think it's gonna matter how far we go down. The Fed should still cut because I don't think the M&A market can be healthy at this rate. There's a lot of liquidity, people say, but there's liquidity for certain people, not enough liquidity for others. It's not like, you can't paint with a single brush here. So for the market to be healthy again, for there to be healthy level of M&A activity, especially in the IPO market, I think the Fed has to continue cutting. And I don't think today's jobs number is going to change the course of what the Fed has started.
We must look, I guess, forward to the rest of the year where we have a presidential election here in the United States. Does that impact the technology investor, even if you're a long-term investor, when you take into account policy, antitrust, regulation in this country?
Yeah, I would watch for a one-party rule, because any law that is passed through Congress, there's a lot of fear about AI. What we saw in California about, and it became a free speech issue. But there are a lot of these fears about, what can be passed through in terms of deep fakes and AI, et cetera. These things, if we don't do it right, it can actually turn into something that can be a regulation that can actually hinder innovation. So I think doesn't matter which party it is, right? But certainly if you have one party rule, it would definitely increase the probability of something like that getting passed.
CBIZ Chief Investment Officer, Anna Rathman. Thanks, as always, for your time. Meanwhile, coming up, the EU preparing for tariffs up to 45% on Chinese-made electric vehicles. That's as Europe risks a broader trade conflict with China. And what are you looking at?
Well, I'm looking at EVs as well. Rivian is down 6% off its session lows, but it has cut its production outlook to 47,000 to 49,000 EVs this year. It had been 57,000. Why? A specific supply chain issue they're not disclosing that became more acute in recent weeks, and that's their two consumer models and the van they make for Amazon. And the street's concerned. I'm digging into it. And by the way, if you're a Rivian employee that's out there, something, phone me. I think a lot of people want to know what's going on here. It's a Rivian problem rather than an industry problem. This is Bloomberg Technology. The European Union has voted to impose tariffs as high as 45% on electric vehicles from China. Here's how European Commission spokesperson for trade, Olaf Gill, explained the reasoning.
We do not, and we never have wanted to, impose tariffs in this case for the sake of imposing tariffs. What we want is to remove the injurious subsidization, the effect of the injurious subsidization that our painstakingly detailed, WTO-compatible and thorough investigation identified.
Let's discuss with Transport and Environment Senior Director Julia Poliskanova up to 45% tariff on Chinese-built and imported electric vehicles. Your reaction and analysis of that number?
So overall, we do think that today is a good day for European industrial policy. It means there's one single vision, and it means we are serious about trying to create the business case for local manufacturing in Europe. We believe that, and I certainly already see it in some of the data, that some of the Chinese companies will still be doing really well. They have a good product. We still will see those brands on the European market, but they will likely be producing here rather than importing it from China.
Julia, I push back on the one single vision a little bit, simply because when you look at how the vote went out, yes, 10 came out and supported, France key among them, but 12 abstained and a whole number actually voted against, for example, Germany. How much behind-the-scenes work is there now to try and iron this out that they don't have to be imposed?
I think that ultimately, given the amount of pressure that there has been against the tariffs, the amount of negotiation, and the fact that the largest European country have actually voted against, given all this, the fact that tariffs went through does actually mean that behind the scenes there must be an agreement that even though we continue negotiating, we are going with the tariffs. So it means Europe did decide that the case for local manufacturing is more important than the risk of retaliation from China.
Julia, Transport and Environment call themselves the leading advocates for clean energy and transport in Europe. And this morning you published research that basically said these tariffs alone will not save the EV industry in Europe if there is not a refocus, I think is fair to say, on broader CO2 targets and other climate targets. What else is it that you're calling to be done alongside the imposition of these tariffs?
So tariffs only make sense in tandem with a broader, stronger climate policy that would push car makers to actually manufacture locally affordable electric vehicles. As long as the wide industrial policy, so we need to onshore battery manufacturing, for example. The battery import tariffs into Europe is 1%, while a lot of local companies are struggling. So we also need stronger defense measures there. We need to ramp up charging stations, make it easier for people to charge, for example, simplify the way we connect to the grid. So there's a number of measures that all have to come together, and alongside them, tariffs really help because they give a chance to the European electric vehicle industry.
What's interesting is ultimately local analysts over in China saying this is going to have a minor impact on the Chinese EV names, because when all taken in its totality, their market share just isn't that significant to Europe. So how impactful will this be on imports from Geely, from BYD?
So actually, we see that today, given that the US market is closed ultimately to Chinese manufacturers, and given their huge oversupply and overcapacity there, European market is very important. Some data shows that up to 60% today of all global EV exports from China go to Europe, the EU, but of course also the UK and Norway. So it is a significant market. That's why I think Europe shouldn't be so scared of retaliation. Of course, it's a risk, but China also needs Europe. And ultimately, as I said before, we will see the Chinese brands in Europe, but they will manufacture here, they will build batteries here, and hopefully we as Europeans benefit from them in terms of IP and value.
We really appreciate you sticking with this story throughout for us, Transport and Environment Senior Director Julia Briskanova. Sticking with China, Shanghai's CSI 300 index continues to surge. Investors see government stimulus creating an opportunity for firms. Let's discuss all of this and the sustainability of the rally. Bloomberg's Isabel Lee, 26% in 10 days. Is this going to continue?
It's really spectacular. We've seen a wave of buying we've never seen before, or at least in decades. We have economists capitulating. We have BlackRock's now actually buying in after being long a bear. But who knows? We have Rajiv Jain. He's the PM of a $25 or so billion EM, and he's saying that this rally will be fleeting. We have more economists saying that this reminds them somewhat of the 2015 bear crash. So it really, I mean, if you rally this fast and this deep, where will this go? And we have Goldman Sachs saying that, okay, obviously this increases the optimism in the market, but it remains another question whether the Beijing will actually implement any of this stimulus. So it's really wait and see now, and they will get back from their Golden Week holiday next Tuesday. So I think that's really the determinant.
Isabel, where does China's technology sector fit within this narrative? We've been touching on it with you this week because there is US investor interest in some of those names. But does the same kind of broader philosophy apply?
I think with the Chinese tech sector, it's kind of like the U.S. tech sector. It's a little bit independent because if you must recall, the Chinese government approaches that segment very differently. In just the past couple of years, they've doubled down on it, then they eased on it, and that's why you see this kind of optimism. But for this one, it goes beyond that. It's really the whole economy. They're definitely trying to really boost the sentiment, and this is why it happened before the holiday, because they have a tendency to do that so that people feel good when they're off for that week or so that they spend. And we have data from Citigroup saying that spending is indeed robust. So I think that's a different approach. But overall, this seems to be more of a coordinated measure, and there's buy-in from the government. This is why banks like, again, Goldman Sachs is saying that maybe this is different, but it still remains to be seen. But for now, we have really ETFs having their best global flows, and we have a lot of that coming from ETFs linked to China.
Bloomberg's Isabel Lee, super smart reporting, focused on tech. Really appreciate it. Thank you very much.
Meta. It's announced it'll start to actually integrate an AI movie generator, similar to OpenAI's Sora, into its apps. Maybe sometime in the next year. Bloomberg's Kurt Wagner joins us for more. Again, the focus on AI is relentless over at Meta.
It has been, right? I mean, it's been this story for Mark Zuckerberg and this company for the whole year, for sure. But even just last week, Caroline, you'll remember we were talking about Orion, these augmented reality glasses, the Ray-Ban Metas, their AI-powered smart glasses. Now they're coming out with, video-generated AI product. So this has been a very steady stream of updates from them that's not a coincidence. Of course, this has been what Mark Zuckerberg has been talking about for a long time now, and now we're seeing some of the results of all of that talk.
It is a steady stream, and it is interesting because you and I spent 2 days at Meta last week, and this wasn't shown to us, and now they've put it out this morning. But I guess what I'd reflect on is that they are doing all things with open source being at front and center. You have the sort of consumer-facing technology, which you can access through the Ray-Bans or through the application. Then there is the sort of more enterprise and industry-leading stuff. Where does the video tech fit in? Are they going after developers, for example?
So the idea is to eventually make this a consumer product. It will be integrated into their apps with the hope that people will then create more video, edit more of their own videos to make them, more fun or different, and increase sharing. At the same time, they're getting this in the hands of some filmmakers. They wouldn't tell us which ones, but they, say they're out sort of partnering with the film industry because they want this to be a complementary thing, right? The last thing they want is to be seen as going after the movie houses or being a threat to them. They want to work with them. So it's a little bit of a consumer thing, but also something that they're trying to get in the hands of people who do this for a living.
They've also got to be worried about fake images and ultimately how they show this as AI.
Yeah, and this is a big reason that they haven't rolled it out in the product just yet, is that they're still figuring out some of the safety elements of this. Part of the feature here is you could actually upload a picture of yourself, Caroline, and say, make me into this movie or put me into this movie, and it'll do it. You can imagine the consequences if you're uploading photos of someone else, right? And you're putting them in compromising situations, inappropriate situations. So they are trying to figure out the safety elements of this as they are going. It's a good sign, I think, that they haven't rolled this out broadly if they haven't figured that out yet. So, we'll take that as perhaps Meta growing up a little bit from years past.
Go to my Instagram. I use that tool of uploading myself and making something from it. And you need an imagination. Bloomberg's Kurt Wagner, thank you very much.
Welcome back to Bloomberg Technology. I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Let's just check out on these markets on the week, Ed, because this week has felt rather long. If you just cast your mind back to the geopolitical tensions we were facing at the start of the week, the sell-off that we had on Tuesday, we managed somewhat of a bounce back on the Nasdaq 100, but we're still lower on the course of the 5 trading days. Then we get the mega jobs data print today, much ahead of basically everyone's expectations, more than 200,000 jobs added. And we actually managed to sustain a little bit of buying on the equity front, even though we start to dial back on those rate cut bets. Move on and have a look at what's happening on the individual names. What's leading from a points perspective is in large part been Tesla, even though we see that the EU is voting to put 45% tariffs on certain Chinese car makers. Now, Tesla, of course, makes a lot of the cars in China that ships to the EU, but many feeling that they won't be so pointed at Tesla. Maybe there's a bit of a relief rally on our hands, or maybe we're just buying for the sake of buying. We're looking at also Ubisoft, up 32% now. This is the ADRs traded in the US. They were higher over in France as well. This is Ubisoft potentially is a take private target from Tencent and the Guillemot family. Reports coming from Bloomberg. Lastly, I finish on what's happening on the downside. Rivian, you reported, of course, said that production being cut back and curtailed. It hits the stock. What have you got?
Another name that's looking at our country of origin. Robinhood is exploring an entry into the British market as the fintech giant continues to hunt for growth beyond the United States. A few months ago, Robinhood rolled out commission-free trading for more than 6,000 US-listed stocks to UK customers. Now, it's considering adding UK stocks to the list. Bloomberg's Francine Lacroix caught up with Robinhood CEO Vlad Tenev about the expansion.
The first priority is making all of the great functionality that we became known for in the US available to UK customers. So margin investing in particular is coming in the coming weeks. There's been a huge demand for options as well, options on US equities, because that's just hard to come by here in the UK market. So we really feel like we can differentiate with US offerings, but of course we're looking ahead to multi-currency wallet support and local execution, including the London Stock Exchange. So,
I mean, it's exciting. So in what kind of time frame? I mean, so margin in a couple of weeks.
Yeah.
And then every couple of months, something more?
That's the idea, yeah. Every couple of months. I mean, we have a long backlog of things, and we're continuing to build new things. So we've talked a little bit about new asset classes that are likely going to come to the U.S. first, like futures trading. But really, we think Robinhood can offer a differentiated service for UK investors who want exposure to broader global markets.
Robinhood CEO Vlad Tenev there. Meanwhile, the US is leading the charge in terms of deployment of artificial intelligence, according to KKR's global head of digital infrastructure. He told Bloomberg's David Weston that a similar playbook is being applied in Europe and Asia Pacific, but scale of America's data centers is a clear strategic element for growth. Take a listen.
So U.S. is definitely, at least from our perspective, well ahead in terms of the deployment of AI. But just to try to quantify the scale of it, U.S. data center market is about a 15 gigawatt market, growing to 40 gigawatts. European market is about 6 gigawatt market. That's likely going to triple or quadruple over the next 4 or 5 years to 20 gigawatts. And then Asia Pacific, ex-China, is on a similar trajectory. So the scale is really different between U.S. and those other markets.
You can catch more of this interview on how to overcome data center hurdles amid growing demand tonight on Wall Street Week at 6 p.m. Eastern Time. But data center hurdles are not the only challenge to the deployment of AI. Sometimes it's internal struggles within the AI companies themselves. Take OpenAI. The startup's been roiled by an exodus of top executives and much of its original brain trust. The company today bears little resemblance to its earlier self. This, as its CEO, Sam Altman, is increasingly concentrating power. I want to bring in Bloomberg's Rachel Metz, who had the deep dive, and I guess a picture says 1,000 words is the most appropriate idiom, because if you put the pictures of the faces of all the people that started OpenAI one against the other, you cross out those that have gone and those that are left, it's just 3 people and one of them's on a sabbatical. What have you learned?
Yeah, I mean, there were a lot of people at the start of this company. There were actually 11 of them. And now we're down to sort of 3. We have 2 people actively working at the company, Sam Altman, of course, and Wojciech Zaremba. And Greg Brockman is currently on leave until the end of the year. So it's been a big change. I mean, their C-suite as well has also changed and evolved. They've changed over a lot of people, and a lot of people have left, and then they've also expanded the number of people that they have in their C-suite over the past year. What I really wanted to do with this story was just kind of look at how things have changed over time and sort of where all the power is going at this company.
Does the power residing in fewer hands mean they are able to iterate, to innovate faster? Because it doesn't feel as though anything's been stopped in terms of the tidal wave of new innovations coming from OpenAI, despite the internal struggles.
Yeah, a lot has changed both internally and sort of like from the outside looking in at the company over the past year since Sam Altman, the CEO, was briefly ousted and then returned. They had a lot of staff changeover. Also, just the number of employees there is more than double what it was late last year. It's at about 1,700 people at this point. So you see these changes, and then you also see more people are reporting to Sam. I mean, he said that publicly. So there's a bit of a flattening of the organization there. And then they are pushing out these products one after the other after the other. There was one yesterday, actually. They just keep coming. So, the push towards commercialization, there's an internal consolidation of power. And it just shows that this company is really trying to move toward making more money, becoming a larger company, becoming more of like a corporate technology company.
Rachel Metz, busy life. We appreciate it. Meanwhile, coming up, we're going to be joined by Vinod Khosla on OpenAI's internal changes, but its massive funding round, and of course, the future impact on society. This is Bloomberg Technology.
OpenAI just closed its latest round, and it was a historic one. In today's VC Spotlight, we're joined by the founder of Khosla Ventures, which has a history with OpenAI of its own. It wrote the first check into OpenAI and is participating in this round as well. Vinod Khosla joins us now. And Vinod, that's where I want to start. We've discussed many times you wrote the first check into OpenAI. What was the rationale behind participating in this round? And we've gone over the numbers, how big they are and why it is historic.
Well, the reason to participate is because I'm pretty optimistic about the impact AI can have in all parts of society. It's very, very large over the next 10 or 15 years. So if you're a long-term investor, as I am, it makes sense.
You have a fiduciary duty to your LPs and you are a long-term investor. And as always, I always put on social media that you're coming on the show. And many people in the Bloomberg Technology audience say, does Vinod Khosla sense that an IPO is coming for OpenAI? And so he's got into this round in preparation for that.
We haven't discussed an IPO. The structure today isn't set up for an IPO.
Let's talk about that structure. Have you been discussing turning into a B Corp, deciding to be more for profit?
Well, Sam has publicly discussed changing the structure without talking about the specifics. And that's probably all I can say. I think it's a good idea for this company to be set up to raise more money when needed. I think the way perspective on OpenAI is they've, over the last 2 years, crammed 20 years of rapid growth in revenue into 2 years. When you have that kind of growth from almost no revenue to billions of revenue, as has been reported, you want to be set up and you will need to consume capital, especially in data centers and some other training centers, etc. So the perspective you should take is 20 years of growth in a normal startup in 2 years and rapid growth. You would expect to see changes.
Internal as well. How have you felt about the fact that the founding team that you first invested in looks very different now from the team that leads the business, apart from Sam?
Well, I think the team looks different, but it's very strong technical team. And what has been happening is streamlining it for rapid movement. As you know, the company has been producing products at a blitzkrieg kind of pace. Very few competitors have been able to keep up with the wide range of products and pretty significant capability that the company has developed. And I think the key in this race is to beat the competition, not worry about others, and frankly, grow revenue very rapidly, and which is usage very rapidly.
Vinod, last month you wrote in your blog a piece titled AI, Dystopian or Utopian. I read it. It's a long read, but in conclusion, you see a path to AI unlocking wealth that is basically held by less than 1 billion people, being extended to nearer to 7-8 billion people through AI. The bit that was missing from the piece, I felt, is how does OpenAI get us there? You are very focused on OpenAI, I guess, as a leader in getting human access to artificial intelligence technology. Forgive me.
Mm-hmm. Well, what I spoke to in this piece is AI and address some of the critics' concerns about the dystopian things that might happen. And I'm not saying there's no risk, but I address all of them fairly specifically and then talk about the abundance it can provide. It's the most important tool we've had in human history for creating abundance and creating a fairer, more equitable, more well-off society. The company that wins in AI will lead this race. I suspect more than one player will be participating. So it's not just OpenAI, but I'm very, very bullish. OpenAI is executing extremely well on product, which is what matters, and on revenue growth. So I'm excited for OpenAI as being a leader, but probably one of the leaders in this space.
To be a leader, do you think Sam should take equity himself in the company?
That's for the board to decide. I do think Sam deserves something for what he's done, but it's not his highest priority. It's far from his highest priority.
Vinod, what is your assessment so far of Sarah Fryer? My understanding, speaking to some of your peers and colleagues in industry, is that she prepared a pretty straightforward presentation that tried to educate those that didn't have as clear an understanding of the path forward and business model. And actually, a lot of investors got it. They looked at the presentation and went, okay, we're on board with this. What was your reaction to her and to that?
Well, I've known Sarah for a long time. I was on the board of Square, now Block, when she was CFO there. So I've had a long relationship with Sarah. You're exactly right. She prepared a crisp presentation. It was simple, straightforward, said, here's where we are today. Here's where we expect to be a year from now. Much more than that is not that predictable. And it was compelling. Obviously, it was compelling to me. Otherwise, we wouldn't have invested.
Fair.
And what's interesting is you say, look, it won't be the only one, but you want it to be the leading player. There was some consternation, Vinod, that within the documentation, there was a push that anyone who backs OpenAI can't back its competitors in the future. Is that normal? Is that something that you want to see in such documents?
You know, in very large bets, this is pretty normal. And it isn't a requirement. It's not a legal commitment. It's a mutual understanding, and we operate a lot on trust. So investors committed to get behind OpenAI and not its competitors. And that's pretty normal, especially at this scale.
Vinod, I'd like to end our conversation by just talking about technology. Every day, I have a conversation with ChatGPT 4.0 voice input, or I talk to Meta AI through the Ray-Bans. And sometimes my wife looks at me baffled, or in the street in San Francisco, or my colleagues here in the bureau. And I say all that to ask the question of when you think the tipping point is, that the large body of people out there either understand how they're supposed to be using this daily, or believe that they should be using it daily?
Well, when I put my email address on my business card in the 80s and had dinner with my business school friends, they laughed at me all night. So if unfamiliar things, I'm wearing AirPods, which would have seemed strange 10 years ago. So people do adjust. Some people adjust faster. I think what the question you have to ask is, ChatGPT useful to you? And it's extremely useful to me in a wide range of tasks. And AI is generally useful to me very broadly. Even my Tesla driving is incredibly valuable to me. So that's all AI. And so focus on what's useful, not the perception of it. And in the end, it'll spread everywhere if it's actually useful to more people.
Quick last on what's your favorite thing currently to use ChatGPT for?
Wide range, from following scientific stuff. I participated in a scientific meeting where I didn't have a background. It was extremely useful in interpreting things that were being said for me. I also used it to design my garden.
There we go. Well, if the orchids are anything to go by, it's a pretty great garden. Vinod Khosla, we appreciate it, founder of Khosla Ventures. Japanese automaker Toyota, well, it's boosted its investment in Joby Aviation by $500 million, bringing its total investment in the air taxi manufacturer to $894 million. Here to discuss is Jobin Bevirt, Joby Aviation CEO, who's had a busy few days. You're getting more money. You're putting your aircraft in Grand Central in New York so people can see it, understand how it works, what it's like to sit inside. What does the Toyota partnership bring you? What nuts and bolts are they actually doing behind the scenes with you?
So Toyota is an incredible investor. They've been with us for 7 years now. First Toyota Ventures, then Toyota Motor Corporation, and that when they did the investment in 2019, they sent engineers that are working shoulder to shoulder with our team in California. That's been an absolute game changer. Last year, we agreed to a parts supply agreement with Toyota, where Toyota's making incredible, really high quality parts for aircraft, parts for our motors and actuators, and for our battery systems. They've been incredible. And now with this next $500 million investment, they're leaning in even more. And one of the key things, we have this dream of taking this and making it something accessible to everyone. And Toyota is known around the world for making incredible cars with spectacular reliability and safety.
But why won't the chairman get in one of Toyota? Like, how much are you managing to convince him and others that this is the safe and very real way to travel?
We are really excited about that, and he's really excited about that. He asks me every time I meet with him, when can I get in and fly?
Okay. Ed.
JoBen, I'm super interested in the future of this industry in Japan and the adoption there. I think you're supposed to next month even demo some tech, right? Do you see it superseding the United States for eVTOL?
We see spectacular lean-in from countries around the world and regulators around the world. Just this morning, you heard the FAA administrator say that he expected certification as early as next year, and that this technology was going to have as large an impact as cell phones and automobiles have had on our lives. And so just having lean-in from regulators like that, from JCAB in Japan, is just a dream come true. I've been working on this for more than 15 years, and the momentum we're seeing in this industry has never been greater.
Toyota is going to do lithium-ion out of Greensboro, North Carolina. Are they going to supply you? You're going to buy lithium-ion for them?
That the investments that Toyota's making in North Carolina are just spectacular. The advances they're making in batteries are phenomenal. They've been investing in hydrogen propulsion, which is going to be the next age for aviation propulsion. So across the board, we could not dream of a better supplier than the world's #1 automotive company, Toyota. I'd also like to highlight that last night we had Uber CEO Dara in Grand Central Station with us, and it is just spectacular to have the #1 automotive company, the #1 ride-sharing company, and the #1 airline with Delta, who's also one of our investors and strategic partners. Joby is just continuing to deliver day after day and year after year, and it's so wonderful to have incredible partners like we do alongside us.
I ask again, when will I be in it?
So we brought our aircraft here to New York this last fall, and we're able to show the community not just how fast and efficient this new mode of transportation will be, but also how quiet it is. And that is critical to opening up new takeoff and landing locations. So we're working with the Port Authority here to get vertiports permitted at JFK, LaGuardia, Newark, and to be able to build these best-in-class experiences. We're looking forward to providing trips to upstate New York and connecting the entire region.
All eyes on the regulators then. JoBen Vivek, we thank you, Joby Aviation CEO. That does it for this edition of Bloomberg Technology.
Recap on the pod, you know exactly where to find it. From New York and SF, this is Bloomberg Technology.